Welcome. 2 years, almost 3 months after Gustavo Petro, the first left-leaning president to be elected in Colombia, have been a disaster in terms of the financial markets. And we're going to analyze relatively to the region why this is the case. Because yes, there is a pandemic, and yes, Latin America overall always has some political instability, but definitely there is some issues going on in the financial markets in Colombia. So the 5 countries we're going to analyze: Argentina, Brazil, Peru, Chile, and Colombia, and Brazil. The ETFs. So ETFs are what we use to see how the index, the stock market index of a country is performing. So if you think about it, every single country has big corporations that they go into the market, they become public, they issue stock or shares of their business to different investors. And based on that, on the economic results of those enterprises, then their shares go up or down in value. When you aggregate a bunch of them into one, it becomes an index, which basically reflects the environment and the financial enterprise of a whole country. And this is what we're seeing. So Argentina, 136. In the same time Petro has been president, Milei has increasingly provided value to the economy. You can see just completely overshadowing every single country in the region. Then you have Peru, which we're going to explain why Peru is doing so well as well, 64% up in 2.5 years almost. And then you have the laggers, which is Chile, 4.24% down, Colombia, 6.97%, almost 7% down, and Brazil, negative 12%. All of them, Chile, Colombia, and Peru, with Lula da Silva, Gabriel Boric, and Gustavo Petro, all of them left-leaning candidates. Let's analyze Brazil, because we need to understand what each index has. So Brazil, your EWZ, which is the ETF that we used, 58.10% of the portfolio are in the top 10 holdings. So the biggest ones is Nubank, which is actually also a Colombian fund. So banking is 25% and energy is 24%. Why are we having the sectors above? Because we also need to understand that some people say, oh, it's because Colombia or Brazil are too exposed to energy, and energy hasn't done well in the last year, which actually has done really well. So here we're trying to remove that bias towards sectoring, because we're going to see as we go over this that every country in Latin America is extremely exposed to financials and to energy and utilities or mining. So it basically it's a region that is not well diversified across their industry. So Brazil doing poorly. Then we have Chile. Chile is also 26% banking and 22% mining. We know Chile is the biggest copper producer in the world. Surprisingly doing terrible, 4% down, when copper is the main resource for electric wires. And in the last 4 years, we have seen how the markets, the global economy is moving into buying more and more copper, because we want to electrify everything, to energy vehicles, electric vehicles, and the electrification of everything. So Chile should be one of the most beneficiaries of this initiative. But surprisingly, the market doesn't care about that, because it doesn't find trust in its system. Then we have Colombia, another 30% in banking, 24% energy exposure. And then you have different subsectors there, but mostly is decided to banking and energy. So Bancolombia, which is, and Davivienda, and Sudamer is the biggest holders there. And you also have Ecopetrol, which is the national petroleum company, which is doing awful as well. Now, Colombia, as we see, is heavily invested in 3 sectors: the financial, the energy, and utilities sectors that have been or could be targeted by left-leaning Petro. It's very interesting that in Brazil, Chile, and Colombia, banking is the biggest exposure. And banking actually is an amazing proof of how the economy is doing, because banks are the ones that issue credit. They issue credit to business, they issue credit to households, they issue credit to mortgages, they issue credit for small enterprises. So if banks are not doing well, it's a big reflection of the credit and the financial and economic movement within a country. And in this case, when you have 30% of an ETF or an index in the banking sector, it really shows that the economy is not doing well because there is no credit involved, there is no financial transactions involved, which is synonym of lack of progress and financial transactions. Then you have Peru. Peru is 22% banking, 50% mining. Peru has done extremely well because it has silver, so 72.3% of the portfolio is the top 10 holdings, so very concentrated in 10 names. 50% of this index is mining, especially silver, and we know silver has reached all-time highs in the last weeks at $37 per ounce. So also gold as well. So they have benefited really well. Similar structure to the Chilean one, but they have benefit because they probably have a president that actually cares more about the economy. And then you have Argentina, which is our extremely shine enterprise index across the Latin American markets. 31% of the 71% of the portfolios in the 10 top holdings, and you also have a lot of mining and retail. So Mercado Libre is just like the Amazon of Latin America, is extremely doing well. So what's the issue with Colombia and Brazil and Chile? But let's focus on Colombia. The fiscal deficit, because a president that just promises everything and just wants to nationalize everything and make sure everyone gets a subsidy, well, you run into fiscal deficits. And because of that, there's also a shortfall in tax revenue because companies don't want to invest. Where first, Colombia has a really high tax rate, but also they don't trust a president that is not market friendly. So less tax revenue because there's less transactions, and also this subsequently makes the need to cut budget because there is no money. If you have fiscal deficit, if you don't recollect any tax, and then you want to be aggressive with your expansion of social welfare programs, well, you have to cut budgets, which actually cause way worse situation because a lot of poor people cannot find jobs, so they depend on the government, but if the government doesn't have money, then it's just worse. So the Colombian growth rate, extremely bad, even after the pandemic, 9.9%, 7.3%. Those are outliers because that's when you have the recovery. But in the last 2 years, we have never crossed even 2%, 1.6% after Ivan Duque left the presidency, and then you can see negative 0.5, 1, 1.1, 0.1, extremely mediocre growth under Petro. Another one, look at this. This is the most important graph, I think, because this is the price book versus return of equity. You see that Colombia and Brazil and Chile have really low price to book. It means it's cheap. Like, it's actually trading cheap, and the return of equity is not bad. But investors still don't trust the market. They think it's cheap. The Brazil and Chile and Colombia is cheap, like in a financial ratio, it's cheap. It has good returns as the companies, but there is no trust in the environment of those countries. So it's very, like you can see the NASDAQ and the US, extremely high return of equity and pretty high price to book. But because people trust the systems and they trust the business friendly of those countries, then they tend to invest. We'll want to see Chile after electing another president. You can also see the Colombian peso not doing too well. This is also the interest rates in the US have increased, but the US peso still hasn't gone down even after the Fed stopped hiking, and you can see just almost at 5,000. It will come to 5,000 eventually as well, as you see that inflation is not sitting back in Colombia. As you can see, it's the worst country for inflation in Latin America after Venezuela and Argentina that haven't come back since COVID. So it's still holding around 5 to 6%, which is not that great when you have other countries already in the 2%. And this is the interest rate forecast. Yes, the Colombian central bank has been very restrictive at rates of almost 13%. It has gone down, now it's closing to 11%, still 5% higher than inflation. Maybe there could be a drop in interest rates that helps to boost the economy, but it's also that the market wants higher yields for Colombian bonds, higher return for their index, the enterprises, because they don't trust the government. They are requiring more reward for the risk. So what are the solutions here? So I think it's safety, because Colombia has slowly become that unsafe country again. You can see different municipalities already start losing a functional government. So I think the key stepstone in Colombia's most glorious economy time in 2010s was after years of safety and where there was business friendly environments where you can buy and sell, transport your goods and your services without getting kidnapped or extortion. And also, the president has to stop the attack on the energy sector. Colombia depends extremely a lot in the energy sector. 40% of the exports come from petroleum, another 10% from gas or petroleum derivatives. You cannot attack the best sector in your economy by being restrictive and by being an environmentalist. It doesn't work. You need money. You need a slow transition, but at the same time, you need to strengthen the other parts of your economy before attacking the one that produces the most money. And you also need to balance the budget. You cannot win a presidency just by giving away money, because at the long term, you run out of money. So 2 years of not so well development in the financial markets for Colombia. Petro losing some help internally, but we'll see. Hopefully, he reconsiders these 3 points to bring back safety, stop the attacks on the energy sector, and to be more conservative in this balanced budget. So let us know what you think, and thank you for watching.